The Warriors. Everyone show themselves. Turn your cameras on. Let our community know what we look like by Friday.
There you go.
There we go. I knew Steve would do it. All right.
Oh my God.
Dell. Look at this.
I just got blinded by someone's head.
Well, put your shades on and shut up. Right, Stell?
By my lack of hair, right?
Come
You got
back on
blinded.
here. Come back on here. All
Well,
right,
let me
anyway.
find a better spot, though.
All right. Ryan's got his trading jacket on for the NFP. There's Kman looking pretty intense. So I tell you, I'd rather have Kman for a friend than an adversary. How about you guys in face?
Who wouldn't?
Yeah, so anyway, okay. NFP, TGIF, no frickin' problem.
Exactly.
So I don't know.
Not for pussies.
How can we top what happened yesterday? Huh? I mean, can the NFP be wilder than what we had yesterday, guys?
It could in the way that if it comes out really bad, then it could
I mean, real hot or cold? Hot, cold, you mean?
Yeah, I mean, if it comes out really, really bad, and after what happens yesterday, the markets will be nervous. So that could send, and it's Friday, so that could send the markets in a bit of a tailspin. But the whisper's saying that it's not going to be that bad. So let's see what happens on the revisions and everything.
Well, we did get that pullback to 380 that I talked about being possible here in yields, and it was almost like the old days where, you know, stocks under severe pressure, people parked in the long end of the curve. The TLT still looks all right. It's an island bottom. You know, we start cracking some resistance here. You know, you look at the bonds on a kind of through a telescope.
Yeah, but if we look at the reasons why it happened, because of those
yeah, the bank,
whatever. Without that, I don't think we would have been where we are right now, right?
Yeah, but you know, you should look at B of A. So it wasn't isolated. I mean, why are people reacting in big markets? I can't find anything that looks good. Okay, I mean, maybe the best looking stock right now that's held together is Apple. Okay, Apple doesn't look bad. It's consolidation, right? But you have some other things that look like, you know, there's Deere that acts like it's topping out, and this is a leader. Microsoft, a lot of different shares. You know, here's copper. You know, failing rallies. Here's the XLF. This is energy. It's headed for a breakdown. I mean, I tried to find something that looked good, and I can't find much. Here's Oracle, kind of a big one, failing rally. Here's the industrials ETF, starting to get rejected. That was one of the stronger groups. So really hard, you know, the fertilizer stocks like this, you know, they don't look great. I just heard from the sniper, he's ready to start getting short uranium. The whole world's bullish uranium. Here's China, you know, had that great run. And now look at it. You know, this was a great run in January. It's given up quite a bit. Cat tractor, that doesn't look too good either. So some of them could just be corrections, but there are others that look like, you know, there are breakdowns coming. So I don't know. Here's Microsoft. You know, big deal. You know, it takes us out. Who knows where we're going?
Have you got something on the banking sector, Dale?
Yeah, I should have the XLF here somewhere. And it started with the smaller banks.
Started with that Silvergate.
No, before I saw someone talking about KBW, which are domestic banks here in the U.S. that they were under a lot of. Here's XLF weekly.
Yeah,
Wow.
that's the thing. I mean, people
Wow.
taken the small domino will make the big dominoes fall approach yesterday, and everything went into a tailspin.
Well, you know what? So it's taken time for a more than quadrupling of rates to now the tide is starting to go out,
Yeah.
and we're moving from worrying about inflation as much and now we move towards worrying about solvency and earnings compression. And Katie was spot on yesterday. Thought we'd take out that cloud support at right where we're at. It's trying to turn, but anyway, I can't find much that I would really want to be long. Even the gold and silver shares don't look good, even though gold's rallied a few times. They're still under pressure. The grains are under pressure. I mean, if you're long, you're wrong. It looks like in a Bitcoin, I think I'm going to pop my cherry in Bitcoin next week.
Which way?
That's not a nice thing to say. I apologize. Anyway, I'll take my virginal step into Bitcoin. Buy one and take delivery of it and keep it in keep it in
on a
one of
floppy
their
disk drive.
Yeah, that's what isn't that what
No.
it is, Ryan? It's in
Yeah, and who can crack a floppy disk drive these days?
everyone, I guess.
Well, no one.
I
Who's
don't-
got a floppy disk drive anymore?
Oh, I see. Do
You
you
know,
know
the
how to
old,
do it?
Yeah, go on. Let's stick it on an 8-inch floppy, and no one's got a PC that they can crack it and nick our wallets.
Yeah. Do you own any?
No, wouldn't touch it with a barge pole.
Okay.
I'm still bid at 31, which I think is a buck above K's 30.
You mean 3,000?
No, $30.
All right. Well, I'm going to front run you.
Yeah. That's
Anyway, so
easy,
why
guys.
don't we talk about your expertise? So BOJ, tell our community what your reaction is to the BOJ. Ryan came in.
Oh, right. Okay.
Yeah, I'll leave it to Kate because he got up for it, so he can
Okay.
give us the rundown.
Oh,
Yeah,
that's
so
why he
basically
looks
they
so
kept
serious.
everything still. So
Yeah.
small percentage that we had for Kuroda going out with a bang. We didn't get it. Yen reacted a bit. I mean, what we can expect is that it weakens straight away. But then I think the rest of the market being so jittery is keeping the yen from really weakening. If we would have been in a positive environment, yen would have probably weakened more. But now we are just waiting to see what's going to happen with the US situation. But so he's leaving everything, or the rest at least, to Ueda. And even in his press conference, he didn't give us too much. He said that we are approaching their 2% inflation target, but still not sure if it's going to last. And so for the time being, the easing path is still the path to keep. So basically nothing's changed. And yeah, I mean, as I said, in a positive environment, dollar yen, euro yen would have weakened more. But now with we're just seeing SVPs losing 10% per 10% pre-market, trading 34 bucks instead of 70 this morning. So I think the market is more watching what could happen in the banking and other sectors than really caring too much about the yen.
Yeah. Okay. Aussie, it's been kind of the weakness. I think it's getting closer to, I think, some long-term buy zones.
Yeah, 65.5 is interesting level.
Okay.
65.5 is an interesting level to watch after the payrolls later on.
Okay. 65.40. So we're near 61.8. Is that what you're saying? 65.40?
Yeah, 61.8. Yeah, that's the one from
Okay.
the October, February rally. It's
Yeah.
at 65. I've got it at 65.5, and then there's another one, 65.25, which is 23.6 of the big decline we saw during 2022 earlier. So
Okay.
65.25, 65.5 is probably an interesting zone to watch on the Aussie dollar.
It is, because now you're starting to get some short-term, non-confirmations. See, so at new lows now, this is only 2 hour, but we made a new low, and this time we did not confirm it. And we could probably make another new low and not confirm it and get to 65.5. And you have nice divergence on the 2 hour and the 4. The 4, it's not ideal because it won't be above 30, but it will not confirm. It's not going to confirm down there. So there's some things for maybe try a piece after the number. And
yeah, I mean, it depends. I mean, if the number comes out, let's say as expected, and we don't get any massive revisions, yeah, perhaps it's a good area if the dollar gets bought a little bit to look at it. But I'm not really keen on being long Aussie right now, as it's a risk currency as well, right? So if risk doesn't perform well today again, then I think Aussie could weaken a little bit more through the crosses mainly. If in turn risk turns around and it appears that a lot of those regional banks are just a storm in a glass of water or a teacup, then Aussie would be a candidate to rebound. But the jury is out on that for what I'm concerned.
I'm going to wrap my part of this coverage with cable. I talked about taking out the stops here, and if there wasn't follow through, not to get too bared up on cable. I think I talked about the fact that this whole thing looked corrective to me, and it was more of a correction in time rather than price, and actually have unless it falls apart, a decent week going here. So that could have been it for cable. I don't think so for euro. Still looks heavier, but cable's nice week in a strong dollar environment. And look at where the dollar failed on this weekly. It was 537. Okay. Yeah, so if the dollar fails from here too, that's a pretty weak rally. I think we need panic under par. How about you guys?
Under par on what?
The Dixie.
Oh, under 100. Yeah.
Big round number, really get some real good dollar.
Well, it's going to depend on today, but most importantly, in my opinion, on the CPI coming up, which is really I've said this so many times. It's the reason why the Fed has been hiking as fast as it has and as aggressively as it has. And employment, I think we can all agree, has been, pretty solid. Employment or unemployment is not the problem of the Fed, and it hasn't been for a long time. It's inflation. So that's for me is where I'm concentrating. Okay. But today's number, who knows? Last month, we were expecting 200-ish, came in at 500 plus. So it's a volatile number. I'm not going to guess it because, well, I did guess for our competition, but really, I'm not going to trade ahead of it. And yesterday,
pretty ugly week in the 10-year.
Yes, yesterday
rally.
Yeah, I mean, the 10 years is a weird animal because it's not driven that much by rate expectations. Rather, it's driven by, flows, sentiment, all sorts of things. We were saying yesterday that when the markets were pricing, 70% chance of a 50 for the Fed, that, it's gone a bit too far too quickly. The Fed's not going to be flip-flopping between 25s and 50s like that. They need more evidence. And obviously next week's CPI is the big one. And now we're back to 50-50. pricing 25 or 50. So I think that's a lot more realistic in my opinion. But it's a roll of the dice today. The question is, what's the reaction and how do we react to the reaction? That's always the question. And I think we are getting to a point where the Fed will eventually, pause and turn around, but we're not there yet, unless inflation starts ticking down, which I think it will. The Fed is going, they're going to keep going. Obviously, failures like, Silverbank and BB, whatever they called, this is not good for the markets, right? It's not good for anything. Contagion. There's always the fear of 2008.
Who's the other bank? BBVA?
No, that's Spanish. That's Spanish bank.
Oh, okay.
It's IBB,
IVB,
Okay.
yeah, there you go. It's
Silicon Investment Valley Bank or something.
Okay.
It's
all right.
SVB, right?
So all their venture capital deals are falling apart, probably.
Yeah.
Who knows?
So contagion is a big fear, and you have to go back 15 years to go back to 2008. I remember what it was like. I remember spending endless weekends, one after the other, making with my own, with my boss and the whole desk, calculating, what happens if Deutsche fails, what happens if UBS fails, what happens if RBS fails, and we're looking at our books and how they're going to get affected and all that. This is going to be on the back of the minds of everybody. But let me make this clear: I don't think this is anything close to what happened in 2008. So there's going to be fear in the markets, and we saw that yesterday. We're seeing it a little bit today as well. But I wouldn't really compare this to the GFC. I wouldn't.
Yet.
Yeah.
So yesterday in VIX, pretty big candle. I've gone through some option decay in the last month. I've been long 25 calls. Maybe we'll break out here. I think yesterday's candle is a great example of just how short people are shorting vol. And we start getting over 24, there's going to be a pretty good squeeze. So that's another reason to be worried about the market. If we get a VIX breakout, over 25, take this high out. It's going to look pretty good for maybe 29. So I don't know. Looks like risk off is coming if yesterday was real. So the worst thing that could happen is we get a real strong number, right? Is that the worst thing?
I said on the flow show today that I think the bigger move is going to be if we get a strong number. We have to remember
it'll reverse all the softening of the 10-year, which has come off 25 bips.
Well, it should drive yields higher, yes. And remember,
Right.
Last month's print was big. There might be a revision, you never know. So I still think the danger is for a strong number. I mean, in terms of market movement, on a strong number, the market moves more compared to a weak number. But obviously, if it's a really weak number, that's, all bets are off. But let's see. I don't know. What's your guess, Dale? It's a guess, right?
On the NFP?
Yeah.
Oh, I don't even care. I'll just get it over with, and so we can trade.
That's the right mindset.
Yeah. So that's about it. I think we'll see. They're trying to reverse S&Ps, but I said at the beginning of the week, if we take out 3,900, it wouldn't be a good sign. I don't think it is a good sign. Can they pull a rabbit out of the hat and reverse this thing after, is this a 3 drive? It looks too weak. Yeah. So we'll see what happens. I think the daily closes, if they're going to save it, it may just be to save it to give people hope over the weekend. It looks vulnerable. Where do you think, if we're going to get follow through? Now I want to bring Blake in. We get follow through, and yesterday was real, and we don't end up with a reversal.
There is no Blake to bring in, mate.
Oh.
Yeah, he's out today.
Oh.
So what's the question? If we get a
okay, so if we don't get a reversal candle, and we're under this major 39 support. Where do you think is the next level? Right here, 38, 37.60?
Yeah, exactly. 37.60 to
Okay.
38. 38, nice round number as well. But really, the
Yeah.
big level is 36, which is a
Yeah.
roughly there. So that's going to be
Yeah.
the key. Yeah, it's we've said it before so many times. Equities have been very resilient compared to well, given what yields have done, given the QT that the Fed is doing. Remember, they're unloading the balance sheet, and that on its own, it's a huge tightening effect. So, given all that, the equity indices are behaving very smoothly. They're not crashing in any way, and Powell himself has acknowledged that. And so
maybe it takes over a year for people to go from being euphoric bulls to going, oh, it's temporary. Oh, it's temporary. Oh, it's okay again. To finally entering some type of recognition phase, which this would be if we're going to wash out to 3,300 now. So this will be important. So we just identified around 3,800. Look at the 200 week. It's right around there. 37 and a half. What's 37.25? 46. It's right there. You take out the 200 week, and in a heartbeat, you're at 3,300. That's the way it looks.
Yep, and that for me, I've said it for months and months. 3,300, the
crash.
pre-COVID highs is the level where the Fed, I think, is going to, if we get there, is going to say, right,
Yeah.
that's it. They're
Okay.
gonna throw the kitchen sink at it.
Okay.
But until then, they seem pretty comfortable.
Okay, so I think things to pay attention to, like someone asked me today, well, Dale, if VIX is right and it's going up and the market's bad, is that good or bad for the dollar? And, normally we would say that would be good for the dollar, right? I think this can be a very important test to see if when we get this sell-off that the dollar doesn't catch a bid. Maybe the dollar's already gone through catching its bid and is corrected. Or maybe a retest of the lows we had this week in cable and euro. But that would be something different. You would think if we went to 3,300, the Dixie should go to 110, don't you think? Then that would be the answer.
Good question.
Steve?
Steve-O, what do you think?
Say again, please.
You're eating?
No, I'm not eating.
Oh, okay. If we get a big washout in the market, does that translate into like a $110 index or not? Maybe this time it's a kind of a flight away from US dollar denominated assets.
Depends. If we get big risk of move, that should reverse, at least temporarily, the gains in yields. So it's not going to be easy for the dollar to advance, although usually
Great point.
There is this inverse correlation. In this case, there's going to be a flight to safety, and that is at a big extent US Treasuries. Yields should move down, and that should keep a lid to further dollar appreciation.
Okay. Great insight.
I'm gonna counter that somewhat, because if these worries are over banking issues and liquidity issues, you get a lot of foreign countries buying dollars on the liquidity front. They want to shore up, stock up, to make sure that they are capitalized.
Yeah, if they will start completely going off,
Yeah.
And there are big fears about the financial system, that is indeed the case. But if we don't get such a scenario, which for the time being it's rather extreme, right? I mean,
yeah, agreed.
Steve, still, do you mind doing what Blake normally does on a big number? Get data flash up and some charts so that we could see the immediate reaction to the number?
Absolutely. Want me to take the screen?
Oh yeah, I forgot
Okay.
stuff here.
So let me do this. So let's see what we get. Let me.
It's worth mentioning while we are getting prepared. We did get some data today. Some UK data, manufacturing production, industrial production, both missed, not by big amount, but they both missed. The trade balance the same. Norway CPI, for those who trade the krona, came in quite a bit lower than expected. So down from 7% year on year, expected 6.8, came in at 6.3. So that's you know, there's more and more people starting to discuss this. I think Jim Welsh is one of them. By the way, great call on the TLT he got. That the calculation method, you know, it's a 12-month average, 12-month range sample that you're taking to calculate the year-on-year CPI. We're now starting to drop high percentage months, and we're adding lower percentage months. So mathematically only, we should be getting lower prints. All else unchanged, obviously. Inflation is a number that can be volatile. So everything else being equal, we should theoretically be seeing lower levels. But in case, yes, but and that's again, this is what the Fed is looking at, anxiously waiting for inflation, year-on-year inflation to drop. That's what they need. And you can be sure that even though they talk the hawkish talk and always say we'd rather over-hike, over-tighten than under-tighten, they're going to stop as soon as it looks like they're going in the right direction properly, not by 0.1, 0.2% every print. So that's how I think it's going to happen, and that's what the market is waiting for. When does the Fed stop? Because when the Fed stops, then pretty much every other central bank, a few months down the line, they stop as well. That's how it usually is. It's a domino effect.
Speaking of upcoming data, right? We have employment data coming for both the US and Canada, as always the case, right? Just a reminder, the Canadian numbers, for some reason, are very frequently extremely volatile. Just to give you an idea, the forecast for this month is for 10K employment change, and the previous number was a blowout 150K number. Canadian unemployment is expected to eke up by 0.1 to 5.1. US unemployment rate is expected to stay the same at 3.4. Non-farm payrolls are expected to come at 205, while the previous number was a blowout 517, which makes revisions also rather important, because the big number can also have a big number revision to it, and that might also move the markets, right? Because the potential for revising a 517 number is obviously a lot more than revising the average number that you expect on a monthly basis. US average hourly earnings are expected to stay the same, which is 0.3, positive 0.3.
And put your data flash up.
Yeah, I will. Don't worry about it.
I'm just ordering you around, boss.
Yeah. So that's it, more or less. These are the numbers we expect. It's more than obvious that the market is going
small.
Yeah, it's more than obvious that the number is going to respond as always, which is, since the theme is what it has been now for months, we get good employment numbers that should A, be positive for the dollar, B, be negative for risk.
Everything.
Right?
For everything else, yeah. It's one
You
trade.
get the dollar
it is
trade.
practically one trade, yes. Like it or not.
All one market.
Yeah, it is kind of one market, yes. That is fortunate or unfortunate reality that we have to face.
And after yesterday's move in yields, 1 year and 2 year against 10 years, I mean, the inverted shape of the curve is very inverted as it's been in
ever
many years now. I think it may have been more inverted at some point, but yeah, it's
the Civil War
since the Egyptian times. I don't know.
and we usually know what that means, right? The inversion of the yield curve.
All right, 5 seconds.
Let's see what we get any second now.
The Canadian
Canadian
21.8.
employment change, volatile
311.
again.
So that's better than expected. The revision slightly
311.
lower.
The revision is, yeah, a rather
Revised
big one to the
small,
downside, but
504.
this number is rather quite a lot better actually than expected. 265 versus 210. That was the forecast. Unemployment rate
up.
climbing by 0.2 though to 3.6.
Participation rate up by 0.1 as well, though.
Yeah, of course,
Yeah.
it's due to participation rate climbing. And average hourly earnings actually a little bit slower than expected at 0.2 versus 0.3.
Yen weakening, dollar weakening, gold up
And
9.
average work weeks is also a little bit lower. I think the market currently focuses, we've seen that happen in the past, currently focuses more on the key unemployment rate number, which is practically less important.
10-year down 13 bips. And I
Wow.
do have a guest
Yeah.
today. I
Yeah.
have a
Okay, good.
guest.
Great.
Yeah, so we have, for the time being, the initial reaction due to the key number, that is the unemployment rate. The initial reaction seems to be risk on and dollar off, right?
Yeah.
So let's see if the market is going to focus more on the rest of the metrics. But that is the initial reaction, and it comes as a continuation, having to do with the dollar now, on what we already saw yesterday, because yesterday we already saw an initial reversal for the dollar. We said yesterday in our private webinar that since the dollar had already reached an important resistance area, it's going to be important to see how we're going to close the day and the week today. Because there is a decent chance that the dollar might have even topped yesterday, right? Anyhow, we have quite a few hours for the day to pass in order to reassess the data. Those that are ForexAnalytix members know that they will be with us in 45 minutes, and we're going to discuss and analyze the vast majority of markets in detail. So enjoy the interview, Dale, and
Thanks,
for
Steve.
those that we're not going to talk to afterwards, have a nice weekend.
You know what's great about our guest? He's not
What's
on
that?
social media.
Oh, nice. That's refreshing.
Don Dawson, not the invisible man on social media, doesn't have a Twitter handle, doesn't do any of that stuff. He just works and trades.
Mhm.
Welcome. How are you, Don? Great to meet you.
Yeah, thank you very much, Dale. It's good to be here.
Okay, so you were recommended by Alexander. And do you want to share your screen or turn your camera on? How do you want to handle this Zoom interview?
I
You're
can
my
do
guest.
whatever works for you.
All right, let's go with some cameras, and let's have you share your screen, because Alexander said that I'd be amazed at, do you still do your charts by hand?
I used to do those in the years back. Trust me.
Oh, okay.
The old,
I was
no,
wondering.
no.
Okay. I did.
Point figure charts back in the day, and the whole office wall was like it looked like wallpaper.
Commodity perspective. I would
Oh my
drag it
gosh,
with me,
yes.
Don.
That
I'd
used to come
drag
out
it with me. It would have all my meals on it, because I'd have it, bring it to lunch. It had ketchup on it
You are
and
so
mustard.
right. That
Yeah,
was
my
amazing.
friends would say when I was cold in the market, you know what they say to me, those mean friends of mine? Dale, why don't you turn your charts upside down? Huh? So sometimes we have to do that. So,
I tell you, Dale, it's almost as bad as when we used to call the brokers to place our orders, right?
yeah.
And I would be in a drawdown period. And it was almost like, I'd call the broker up, and normally it was like instantly you'd get the fill, right? Because he had a phone to both ears.
Right.
But when I was in a drawdown, it was almost like he was putting his hand over the phone going, Dawson's going long bonds, short them.
Yeah. Okay. I know you. Yeah. Persecution come. The market got me. So, we evolved and we realized the market doesn't care one way or the other. And we learned to take responsibilities for, blowing up our accounts or taking big hits. And, really, that's how we learn. I'm interested, Don, that did you always know you wanted to be involved in the markets? So what led you into this industry?
It's ironic. I never thought I was going to know. My whole family, no one really has an investing background. So when I got into it, I was the black sheep of the family. And then to top it all off, I got into commodities instead of stocks. So that made it even more of a gambler, you know. So matter of fact, I had a Series 3 broker's license back then. I got that just to learn what about the markets are, because back in the 80s, there was no schools. So I said, I'll get my Series 3. I was never a broker, but I just got it. My dad didn't even know what a broker was. So he used to introduce me to his friends as, oh, that's my son. He's a bookie, you know, kind of like that. Which in the long run, I realized maybe I am. But anyway.
That's great, Don.
When I got into it, it was really, I got a sort of little bit of a blue collar background, and I needed some construction custom home building and stuff like that before I got into it in my 20s and stuff. And it was really just by accident. And one of my dad's friends was, you know, getting ready to retire, and his neighbor came up to him and said, "You need to start putting some money in the stock market, you know, to get ready for retirement." And so he was trying to explain that to me. So I'm in my 20s, right? He says, well, you buy something here, and if it goes up to here, you sell it and you make money. And I said, and that's all you got to do. And I said, you're telling a 20-year-old this, it's all of a sudden, it's like, I'm in love. Anyway, I just sort of got hooked on it. And I went to something, I don't know if you guys remember, something called a library. I used to go there and get real books, and come bring them home and read. Edwards and McGee's book on the Bible. Market. Oh my gosh. Reading those, they were already 100 years old when I'm reading.
That was my first book. Yeah. I took a course at the Merck, and that's what they use as their textbook on Edwards and McGee.
That's funny.
And gosh, you know, in the FX world, I sure miss gaps. And the old days when the market would actually close and we didn't have to think about it for at least 12 hours. Right. And
well, that was true. Yeah. That's why we had to have limit moves in the markets, because of those type of things. Right? So people could go home and come back a little bit more rational the next day.
Oh, look, I remember those pools building up in the belly pit.
Oh, yeah. My first limit move ever against me was in the pork bellies.
That was the wild pit when I was a runner on the floor.
Oh,
you know, that's where the big money guys were. So I'm assuming you're like me. I mean, you're self-taught.
Yeah. Oh, it was. I was a 5-year self-taught. And, you know, I taught at a school for about 15 years. And, you know, these people come out and pay all this money to take a class, and, you know, kind of come in there thinking they're going to get like the holy grail in a week. Right. And I tell them, I said, hey, hang on a second. I said, let me tell you, it took me 5 years before I could pull the trigger and say, I can do this. You know, it was about 4, but it took me that extra year to really say, okay, I can now sort of pull the umbilical cord away from the regular job. And it took a long time, and to this day, I'm still learning.
I mean, you know, and the answer you gave, I've done quite a few of these, well over 1,000, and I asked people how long it took to make a breakthrough, think that you really understood, and you had a method that, or maybe a go-to formation that you could count on, using, most say 4 years. And why should it be any different? I mean, if you want to be an electrician, you start off as an apprentice.
I totally agree.
And then a journeyman. So, I mean, everything's a process. Most people don't have the patience to with themselves to wait that long to do it. So, it took you that long. What were your influences besides Edwards and McGee?
You know, I think my first one was Tom Baldwin in the bond pit in Chicago.
Okay, yeah.
He was such a relatively like an introvert, but you know, reading about his book in the Market Wizards, he was just not a big fan of interviews. But when they finally got him cornered and did a little interview,
Jack could do that.
Yeah, and believe it or not, it was like on St. Patrick's Day, and he was sitting there looking at his watch because being Irish, he was ready to hit the bar. You know, whatever.
Sign of the trader.
Hurry up with this thing, you know. But he just brought some things out, and one of the things that really stuck with me was he asked me, he goes, what do retail traders, what's one of their biggest mistakes they make? And he said they personalize losses. And by that, what he meant was, he says, when you have a loss, let's say, because remember in a 30-year bond, which I started out trading that thing, I don't know why, I had a small account and I'm trading the $31.25 tick market, right? So it's, anyway, I'm trading that. But he was pointing out that when you have like, when you take 8 ticks in that market, that's $250 loss, 16 ticks, you know, then you get out to old handle, now you're talking $1,000. So anyway, you take a 16 tick loss, $500, just like that on one contract. And the market was moving around pretty good. But what he would say, or what he said was, a retail trader will take that and say, oh man, that's a boat payment. Oh, that was a car. And this is back in the day. Today it's $4,000 for those, right?
Yeah.
But $500, that was a lot of money. But when you personalize it like that, the pain and the scar that it creates was so bad. And so I started thinking to myself, I was like, how can I get away from personalizing, thinking I'm trading money? And what I did is I came up with this idea of, I took my account size and divided it by $31.25, and that's how many bond ticks I had. So I was married back then. My wife, she was a CPA, and we used to go. I told her what I wanted to do, and she said, "That makes sense, So we go to dinner, and she says, "Let me see that." She looked at the receipt. She got 3 bond ticks, kind of like that. So we did that, and to be honest with you, it took some of that emotion went away. Like if you had a bad day or something, and like he would come home and go, the usual, "How was your day?" And instead of saying I was down 750 or or I was up 250 or whatever, I would say 8 ticks or down 12, something like that for the day. And it really took a lot of the pain away in the beginning. So that was one of my hurdles. And that's why I say Tom Baldwin was really good in that interview with that. So
all right. Well, that's look, do you think Vegas knows that you're not betting with cash? They give you chips.
Yeah, you got it.
Well, they don't even do that anymore. It's just your card. It's not real. So that brings me to something in your trading account. It doesn't feel real. I knew guys that would have big swings in the morning, and we'd walk in 0 degrees to Lou Mitchell's because they have a breakfast special. We could have gone right down to the train station in Riverside Station, right there, and had breakfast. But no, Lou had a special, and you needed an accountant to divide up the check. These are guys having, $40, $50, $100,000 swings, and that's because that was real money.
Yeah.
Are you a believer that after a windfall, that a trader should take part of that windfall and maybe invest it, diversify away from himself? Maybe go buy some coins, or how about enjoying it, going on a vacation, and that makes it real.
Yeah, because that's a very good point to bring up, and that's one thing I always try to encourage people to do is every month at least pay yourself. Give yourself something, no matter if it was a bad month or what, but give yourself a little bit of something, because what that does, that just incentivizes you to work for it, and because if you just sit there and trade, but you don't ever take anything out, at some point you start going like, why am I doing this? Right. So really, I think that's a really good thing to do, is just to reward yourself. Think of the hard work you did, you did the study, the analysis, and the emotional stress that you went through while you were putting that trade on, and come on, let's go. And you got to take something out of the market. There's got to be a reward in there somewhere. Otherwise you're not going to follow through with it. Remember, you're talking about you've got to have patience with yourself. And, if you don't have that patience, for one, you got to have passion in this business. If you don't love what you're doing, this is no place for you to be. But if you have that passion, that adds to your patience, because you can see a future in this. So again, but you got to reward yourself to be able to really, truly see that future. So I agree.
Yeah. Your examples, Don, are that it's all in our head. So we could have the greatest methodology, right?
Yep.
We could have all the tools.
Yeah.
And if our paradigm, and people have problems with their paradigm, I'll share one of mine. Okay. I always had a hard time sitting until my objective on a trade. And my paradigm was, in my childhood, my mother, who raised us, was always worried about money. So when I had wasn't easy to raise 4 on her own. And so when I have a profit, it's hard for me to risk the profit. It was hard for me to risk the profit instead of taking it. And it still is. But I found a way to overcome it by taking partial profits. And, and even going in, I don't go all in anymore. I haven't for many years. So having patience with myself, but rewarding myself by taking a partial profit when I have it, tightening up the stop and letting it work.
I agree with you on that one. And for me, that was one of the things somebody asked me, so kind of hit broadside at me one time. It was a former student and would just send me an email and was asking me about, if you were to tell somebody a younger you, what would you do different today? And you know, kind of like, oh man, that's a good one. But I think the first thing that really popped in my head was patience, and in the sense of patience to wait for the setup. Okay, you have a strategy, but having the patience to wait for it to execute the trade, right? And that is so important to get, is because if you don't have that patience, you know, I tell people when I was in my 20s trading, it was like I'd shoot at anything, buy it, sell it, you know, like that, because I thought that's what trading was. My broker loved me. I'm paying him $40 round, paying $40 round turn for a professional courtesy discount too, right? But anyway, I was trading way too much, and as I've gotten older, you know, more conservative in my trading, I have got such strict rules. It's almost like it's on a lockdown of my strategy is, and if it doesn't meet those rules, there's no trade. And because I just realized there's why I don't trade it, you know, for the adrenaline. That's not something you want to do. If I want excitement, I go out here and do something in the evening or something, you know. But if trading is not that place, it really is. If you're trying to build capital, you really got to have patience and wait for something. And when same thing when, you know, I do an all in on my trades, but I love to scale out. And for me, it's like when I can get that first 1 to 1.5 top profit target, for example, I can leave my stop where it originally was now. And I have to trade in equal units. But the whole point is I can leave that stop at that original place now until it can turn into a decent trail stop. But if it comes back and stops me out, I'm still making a half on that trade, or half of my risk. Does that make sense? So it's like a free trade. Yeah, once I get to 1.5, it's amazing how much
you want to pull risk off the table as soon as possible.
You want to take the bulk of it off, exactly. And when I
you know, doesn't that give you longevity, because it kind of de-stresses the whole process by taking partials.
And you know, and the thing is too, and the other thing, I've gotten away from day trading. I used to do that years ago. You know, I thought if you can imagine, and you remember, I mean, I tried to day trade off of the floor, phoning orders. And now how, you know, it's taking me what, 10 minutes to get an order from my broker into the floor. And here the guy on the floor is going buy, sell. You know, I'm going like, I'm trying to compete with that, forget it. So anyways, over the years, I realized, and now today it's the algorithms. I can't compete with them guys who in a short time frame. So for me, and you know, there are some great day traders out there. It just, for me, it doesn't work. So I'm more of a swing trader where I put trades on and I try and hold them for, my goal is 3 to 10 trading days. So and once I get to a free trade, which my 1 to 1.5, everything goes into you know, a daily chart trailing stop, and that's where I want to stay at. The other thing
since we're on stops, do you believe there are stop hunts? My handle's Forex Stop Hunter.
You know, I'm sure there is, especially with the algorithms and stuff out there.
You're on the floor. Didn't you hear the roar every time they ran through the buy and sell stops?
Yeah, well, I remember from the when we used to get the in the bond pit, they had that what was it called, the squawk box that was on there.
Yeah.
And it used to crack me up because you could stand there and you could hear on days when you could hear newspapers turning in the pit and there was no noise. You never put a market order in on that day because you were going to get skinned. But what was ironic was occasionally you'd hear somebody just sort of squeak out to go like, hey, what was that C period high? Hey, what was that G period low? You know, that kind of thing. And all that was the market, the traders wanted to go up there and take out a high or a low. And there's nothing wrong with that, because if you really think about what is a market, any market we trade, Forex, equities, or it's an organism that eats orders to survive, right? Because if the market can't find orders, it'll starve to death. And if it can't find orders, the exchanges don't make money, traders don't make money. So that's why
they're magnets.
Old highs, old lows must be taken out.
So what do you tell people that put their stops right above and right below swing highs and swing lows? Do you tell them to let their stops breathe and give it maybe a 1-day ATR above that level?
Exactly. If you do not give that market room above those highs and lows, because you can bet at least 8 to 9 times out of 10.
Just happened in silver, Don, about a month ago.
Good grief. So, excuse me, silver is probably one of the wackiest markets. I mean, it's so volatile. I mean, 5,000 ounces, that's a lot of silver in there. And so there's a lot of panic in there when people are on the wrong side of that trade. There's a lot of them GMO orders, get me out. So because there's a lot of pain coming in there. So no, I agree with you on that one. It's putting a stop above a high or a low, you have to have some reason of how far you know, a logical reason you're putting your stop above a high or a low. I've seen people put 2 and 3 ticks above a high or low. And I said, you might as well write a check to charity and give it to somebody who can use it, because you are going to get whipped out 8 or 9 times out of your trades every time.
Yeah. So Don, you have a view on these markets at all? You want to share anything You've been watching cycles. You've been through,
Oh,
probably not quite as much as me. You're a young guy to me.
oh, young. Yeah,
So
I've been here for 35 years now. So I'm,
yeah,
yeah.
I know. Anyway, you still are.
Oh, yeah, yeah. I don't know.
What
I used to have hair.
what do you think about what's happening here in the first quarter of 2023? You have any narratives that you're working on?
You know,
Any themes that you find yourself
I
gravitating to?
the old days of the old market, and nothing's changed in the market. That's why it cracks me up every time we have a new cycle in the market or something new. The people come out and they say, "Oh, this time it's different," or it's a new paradigm, or it just
It
drives
might
me
be new
crazy.
for them. When's the
Exactly.
last time people lived
Oh,
through you have to these markets, the closest comparisons
yeah.
late 70s, right?
Yeah. Yeah. And this is what I like about having this experience is I no longer panic when markets are in a free fall, and I no longer get all giddy when they're going to the moon, because I
Just
know
another
I'm going to
move.
keep doing that, right? I'm not going to try
Yeah.
and pick a top or a bottom, but I don't get all emotional thinking, oh, I'm missing this market, I'm missing this trade. Would I like to be in it? Of course, but I've learned over the years, no market goes up and down forever. And you start to get a little bit more patient that way too, because you're not chasing every wiggle in the market, or just because your friend is in a market and you're not in it. You got to get over that stuff. This is all about, if you're in this to make money over a long haul, you've got to just pick your market, pick your strategy, and place the trade.
Okay, I want
But
to
I'm just going to mention
show
as
this.
far as the narrative goes, I've learned over the years that, don't fight the Fed. And, I'm hearing people say that now. And again, I used to give the Fed a lot more, Federal Reserve, I used to give them a lot more credibility because they have missed the last two cycles really bad. But
Yeah.
the point is, when Powell's out here hammering down, going, we are not going to start, pausing. We're not going to lower rates, blah, 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 blah. We can't fight that. And the stock market, if you're still thinking that, we're going to turn this stock market around,
That paradigm's over.
Yeah, you can't think that. I mean, there's too much. During COVID, during that free money coming in, the low zero interest rates, too much of that mentality of buy the dip, and that works great in that environment. But you got to realize that switch is turned off now. That is not there, and that's when this top came into the market, and we started this correction. Friends used to ask me about, what do you think about the market? What should I do? Blah, blah, boom. And while I don't usually give advice on that, I'll tell them, well, here's what I see. And I said, this time is going to be where the market is not going to be, it's not just a Fed raising rates, but they're also going to be doing that, taking the quantitative easing away and going into the tightening. So that this time we're going to see higher rates, and we're going to see, not buying back the long end of the yield curve, if you will. And so this is going to be a double whammy, and this market's going to have to find some way to support itself under that. And it did not disappoint me. I told people, I said, at least a year from this top, and this was back when we started the correction. I said, you've got to give yourself at least a year on this one, and it might be longer. And it looks like we are going to get another year out of this, so it's going to be a 2 year. And it doesn't even have to keep crashing down. These markets can start doing this thing and worry you to death as an investor if you're not careful, because you'll get in there and make the stupidest mistake of selling everything right down near a bottom. So, if you haven't sold now, then you might as well just be like, okay, find a way of just sitting this out. Now, if you need the money within 6 months to a year, you should have been out this a long time ago, and perhaps you might want to consider getting out now, just in case this thing does turn worse than what it already is.
Okay. So Don, you write some nice articles. I tried to show it. Maybe you could. The name of it's Bar Chart, which is a great service. And Don, your titles are great.
Oh, thank you.
I was looking at them. You talk about the root of Aussie is a grain cycle.
Yeah,
and a lot of people don't even they may correlate Aussie with China and copper, but they don't think about it as an agricultural country, which they are.
Yeah, very much so. And I was wondering, I do like trading the Aussie dollar. I don't trade spot Forex, but I do, in the futures market, I like to trade the Aussie dollar. Very good trending market for me.
Yeah.
And if you think of it in the sense of, I trade seasonals a lot in my commodity market. So that to me, two different hemispheres. So of course, when we're in sort of the doldrums in the northern hemisphere, we're not really replenishing any crops in the wintertime, but here you got Australia coming on board, and you got Brazil, Argentina down there as well. But I just like it because with Brazil and Argentina, they're so close to us that anything with exporting is competition directly with the US. And that basically because how much it costs to ship anything, right? It's about the same darn price. But you take Australia, which is right there underneath the Pacific Rim, and boy, they can buy that a whole lot cheaper there from transportation standpoint. So I've seen that year over year where the Aussie dollar usually catches that bid coming into their harvest season. And that literally is nothing more than just, converting their currency to Aussie dollar to buy grains for exports. And they do a lot of like iron ore, gold, different stuff like that. So it's not just that, but I like when you get a seasonality in crops, it's so darn predictable. That's what I like about that.
I know a lot of guys looking for a June low across the board in grains. That's their cycle work is what it's pointing to.
A June low in price or a
low.
Ooh, that's for the grain markets. That seems for me, it's counterintuitive because it's like that's the usual hedging season, May, June, especially for like corn and so on. That's usually when the producers coming in there and they're starting to sell that kind of a market. And I don't want to be the one who's predicting a top or anything, but I think we've seen the high in our commodities. Everybody's saying, "Oh no, we got 23 is going to be worse." One thing I've noticed in commodities over the years is when we get these parabolic moves that go up like this to all-time highs, rarely if ever do we keep that momentum going up. And you look at lumber, I mean, that was a big failure crash right there.
It sure was.
And wheat is not much different. I mean, look how bad.
How about gold?
And
is there a case for gold? Is there a case for gold, Don?
No, gold is okay for trading it, but this idea of gold going to 10,000 and 15,000, those days are gone. Think about the days when you and I used to trade and we had 4 or 5 markets you could put your money in with any liquidity, right? Today, look at all the different vehicles we have out there to put money in. You have even the cryptos out there now. There's so many different places to put money for diversification. And I think that's taken some of the shine off of gold in that standpoint. How
about Bitcoin? Do you have a view on Bitcoin?
I'm not a fan of cryptos, to be honest with you. So, and probably because I just don't understand them all.
Like me.
Let me put it this way: I just don't trade the darn things because I think it's not a tangible asset in my opinion. So I can't trade something that's not tangible.
Very reflexive.
I can't trade something that's not on a listed exchange, and I can't stand something that doesn't have any regulation in it. So yeah, it's not my part.
Okay. All right. And that's a great point. How about your broker? I remember I always felt more comfortable if my broker was a member of the exchange because the clearinghouse would back up anything that happened at a member. And we don't have that anymore, do we?
I think all the brokers still have to be registered with an FCM. Which would still be.
But there were FCMs that failed. Stopper. Okay, and the exchange, it was the CME that made things good.
Isn't that something? I know. Yeah.
If you were a non-clearing FCM, your funds weren't really that safe.
Yeah, but you look at it today. I mean, nobody, unlike in the equity market, you've got the SIPC, you have insurance in there for up to $500,000 or whatever it is over there. But we don't have that in the futures market. I mean, your account literally could go away tomorrow and there's really nothing you can do about it, right? Unless there's some, like the CME stepped up once they got as much money back as they could, but the CME stepped up and put the money back into the accounts, and they had to, because that was the biggest black eye to the futures industry almost in history. So they had to do that to get the credibility back. So and that's what I do about a regulated exchange.
So you survived this interview, that you're now my trading warrior brother.
I'm sorry
you're my trading warrior brother now.
Oh, well, thank you very much. I appreciate that.
And I recommend that people go to barchart.com and check out Don Dawson's columns and his writings. And, after a few minutes, if someone knows. And it was great. Jeff, someone was here. Jeff said he missed Sign of the Trader. And he was on the SIBO for 30 years. So people that spend time on the exchange floor, that's kind of a brotherhood, isn't it? And weren't we fortunate to be there instead of what people have to go through to find? We were surrounded by some of the best traders in the world. We didn't have to surf the internet to find all the discernment from the charlatans.
Yeah, I think I think the way we had to come up through learning doing the charts by hand, for example, was almost a sixth sense to how we picked it up from, because you
Yeah.
could feel every day when you were updating your chart with, especially commodity perspective, you had a
NLP,
trend line. Yeah,
neuro-linguistic programming.
yeah, it really was. It burned images. You could feel a trending market. You could feel, because you would always curse on commodity perspective, because in a tight consult, like crude oil right now would have been a nightmare putting on a chart, because you're sitting there with a pencil, ripping the paper, putting this little mark, and you're going, and you just know, I can't trade that market. But today with a computer, and the other thing too, was we were focused on a market. Like for me, it was a 30-year bond. I loved interest rates, trading them, and just trading the interest rates, but you got to know everything about that market. Now today, man, we can click on something and be in 30 different markets in the blink of an eye, and this chart just goes whoosh, like that and populates, and you don't feel it no more. But just I don't feel it like I used to.
I know what you mean.
It's just a picture to me. You know what I'm saying? So it takes a little bit more to get that sixth sense in there now, to get back into the market. Feeling the market. It
takes time for your trader intuition to build.
Totally agree. Yeah, if you don't have that intuition, that's some people say that's you're trading with emotion, but after time you start to feel and you see patterns in the market, and you can almost go like, I've seen this movie before, and that's how you react to it.
Speaking of intuition, Alexander Perna had great intuition to have me invite you here. He thought it would be a great interview. I really enjoyed talking to you, and it's great to hear a voice of reason.
Oh, well, thank you very much. I appreciate being on your show.
Let's keep in touch and do it again, Don.
Let's do it again soon. I'd love to do that. That'd be
all
great.
Right, Don. Don Dawson, everyone, look for him on barchart.com. No Twitter handle. This guy is all business, and you could tell he loves what he does. It comes across.
Thank you. I do.
All right, Don. Have a great weekend. I'm a fan. I'm rooting for you.
Thanks. Look forward to talking to you again.
All right. Adios.
Thank you.
Thank you, everybody. And
you
could join the team in 14 minutes on the Morning Edge. Don't just count your pips, count your blessings. Have a great weekend. See you next week. Thank you, guys. Adios.